Hey traders, it's Hima here, and I've got Chart of the Week taking a close look at the VIX. Today's Tuesday, March 17th, 2020. Now, before we get into it, it's important to remember that trading and investing can be extremely risky business. Therefore, it's your responsibility to evaluate any information, opinion, advice, or other content contained in this video. So what is the VIX? You may be newer to trading, or you may be suddenly looking closely at your accounts given all the craziness going on in the world these days. The VIX is the CBOE Volatility Index. Volatility is the dispersion of returns. Okay, what are expected types of returns based on different aspects of an investment. And the key is the higher the volatility, the higher the risk, either of particular investments or the environment in which those investments are in. Now, the CBOE Volatility Index, the VIX specifically, is based on the price inputs that come from the S&P 500 Futures Index options. So the S&P 500 Futures are used in a variety of ways, including the ES that I comment on every day in the full skinny. So when you're looking really close at the S&P 500 market through the ES or through an ETF or through the big futures contract, you are very familiar with what's going on with the VIX. However, you can use the VIX to have a better understanding not just of S&P 500 markets, but the market overall. And it's known as this fear gauge or fear index. Okay. So when the VIX is really high, like it happens to be right now, it shows a high level of fear or stress or risk that's in play when investment decisions are being made. From everyone from you and me and everyone else looking to manage their own money to folks on Wall Street. Now, the VIX itself is not just an indication of what is going on out in the world. It can actually be traded directly. And you can do that with options and ETFs, okay? So I want to make sure everyone's on the same page of what the VIX is, especially if you're newer to trading or, like I said, happen to be kind of checking back in on your accounts with all the wild stuff going on in the world these days. Now, of course, we will go to the charts. And we're going to look at the VIX on 3 time frames, monthly, weekly, and daily, to make sure you have the best understanding of what's going on and how to use it. So here's the monthly chart of the VIX. It's plotted just like anything else I would analyze here for you. And we've got the RSI power zones on the bottom with candlesticks on the top, each candle representing 1 month of the VIX, so 1 month of volatility measure. Not surprisingly, you can see 2 huge bars for February and currently for March. Now the March bar is coming up really close to, okay, it hasn't hit the intraday high, but it's coming really close to what was going on in 2008. And that is alarming, but that alone is not an indication to take action on, because just like a price chart, the VIX will ebb and flow. Okay, so there will be times, even in a bear market that may be persisting now, there will be times when the VIX kind of slows down, and generally that's associated with sideways action in the market or even a market rally, but then we'll pick up again. All right. Now, when you look at the momentum of the VIX, so the way the VIX has been moving as per RSI power zones, I want you to notice that since 2004 and 2005 and 2006, it would hold out in the bull support power zone, and then it spiked right up to the bull resistance power zone area in 2008, October. Came back to the bull support power zone in March and April of 2010 and then 2011. And right now, it's back at the bull resistance power zone for the first time in 12 years. So if it stabilizes here at all, it doesn't necessarily mean it's going to come back into the bull support power zone. It just, again, suggests that we might have a pause in the market, or we might have a relief rally. All right. So that's the monthly picture. Now we change to the weekly picture. On the weekly, the last instance of bull resistance power zone was with the February 9th, 2018 week. Okay, not looking all the way back to 2008. It's more recent. And we have well exceeded the high from February of 2018 and the highs from August of 2015. Still deep into the bull resistance territory. So based on the weekly chart, it doesn't look like volatility is slowing down just yet. you might look at this and say, hey, well, we have this longer upper shadow. Well, yeah, we had a long upper shadow last week and the week before that and the week before that. Okay, shadows on the VIX tend to be long when the bar range is wide. And so that is not as useful an indication of a potentially changing trend the way it can be when you're just looking at price patterns. All right, so be careful by making decisions based on the VIX having a long shadow or a wick on a candle, because that's not necessarily unique information. So with where we stand now, a couple things I want to look at are, what is the breakdown of the previous week's range of the VIX? The first breakdown for me is always the midpoint of a range, and so I'm looking at 50%. So if we came off the highs in the VIX this week and got back to the midpoint of last week's range, that would be an interesting juncture to see if the market really was kind of calming down, or if it's just a retracement and then it starts to surge up again with fear, okay? You can look at other divisions along the way. And this is something I'll be detailing in my new GAN trading patterns course that I'll be teaching live very soon. So you'll be getting information about that. It's for my more advanced traders. So you'll be getting information about that if you haven't already to dive into. Now, let's take a look at the VIX on the daily time frame. Notice that I still kept that 50% measure looking at last week's range. Okay, it's just that now it's covering several bars instead of one specific bar, because now we're in a daily chart. Notice also here that we pushed up from the bull support power zone to the bull resistance power zone, but that wasn't the end of the story, okay? The VIX pulled back briefly and then kept pushing higher. This is comparable to how price action on the daily chart of many index-based markets, the ES, the NQ, related ETFs, are all really pushing down into the bear support power zone, but not hanging out there. They just keep pushing lower, not stabilizing and turning up. So what I need to see here is, in addition to the measure of last week's midpoint, I want to look at yesterday's midpoint. And check this out, guys. Yesterday's midpoint, we did return to with today's action so far. Okay, that's the 70-70 line. And the low today, the intraday low on the VIX, was 70.37 as of this video, about 1 p.m. That is, to me, a sign that the VIX still has room to run up, in which case that means the market still has room to run down. But the second thing I want to look at today is how this session closes. Does the March 17 session sustain a closing break above yesterday's range? And if it doesn't, I want to see where the actual close falls, okay? Because if we start to close back towards the lows and even get below 70.70 in a close basis, that might be a good indication of a little bit more of a sustained rally. So be careful out there. Be very strategic with what you do, okay? Follow the data, follow the market, follow the patterns that you see, and I'll catch you on the inside. You can sign up at himareddy.com/gift to get my hot, timely, actionable updates as soon as I publish right to your inbox.